All right. Well, good afternoon and welcome to the another version of the mortgage update with Mike and Joe. Joe, welcome. How are you?
Good. How are you, Mike?
Good. Happy Valentine's Day.
Happy Valentine's Day. It is
And-
Valentine's Day, coming off the heels of the Super Bowl.
I know.
Unfortunately, I mean, as everybody knows, the hat is gone, retired for the season. We'll have to wait till next year with high hopes for the Bills. But we press on.
Yeah. The Bills, it was a great season. Obviously, they didn't, get to the big dance, but they have a great team, and I think we're looking forward to the new year. But for all the Chiefs fans out there, we want to congratulate them. It was a great game, probably one of the best games we've seen in a long time.
Yeah,
when you think
one of the better Super Bowls in a while.
Yeah, it was great. So, well, listen, let's talk about the market, Joe. So, obviously, this morning we had some news regarding where inflation is at. I know a lot of folks that are out there listening, wanting to know where rates are going, and maybe you could just share, with the listeners, what we learned and what the impact was.
Yeah, I mean, I think, over the last couple of weeks, we saw a very positive rate environment. Rates came down pretty low, but, as these economic data has started to come in, consumer price index came in, a little higher than anticipated. It was anticipated at 6.2. It came in at 6.4, up from last year, and up 0.5% from last year. So I think, we're starting to see that the Fed's work is not yet done, as we've heard in some of Biden's comments, as well as Jerome Powell's. So, the kind of sentiment remains that rates are going to continue to rise. But we have seen them stabilize, right? I mean, we haven't seen any of those knee-jerk days like we've seen in the past. So that's kind of been promising in that sense.
Right. So, Joe, before we jump in and we kind of talk about, we're only really 1 month in to this year, but before we share what we saw take place in January, go through those numbers, I thought I'd share a bit of good news. Actually, this came across my desk that General Motors is investing $68 million in a new plant right here, which is, again, great news for Rochester, great news for upstate. New York's going to bring more jobs, and I think in these, let's call it uncertain times, I think it's nice to see that there's cool things and good things that are taking place in our local marketplace.
Absolutely. I mean, think how big, GM and Delco were back in the day, and in Rochester, they were, it was them and Kodak, and, seeing them come back and reinvest in the community is great.
Right. So let's shift gears, Joe. Let's talk about the market, what we saw in the month of January. Obviously, this year, it feels, a lot like last year, maybe to a certain extent, a little bit tighter. It's a great time to be a seller, but it's also a great time to be a buyer. So can you just share with us kind of what the stats look like for the month of Jan, in terms of the sales that we saw, where those homes were, what they sold for, what they appraised for? Can you just share with us kind of, I know it's just the first month of the year, but what is the actual data and what is it actually telling us at this point?
Yeah, so I think as we've seen over the last 12 months, and we continue to see, it's still a seller's market out there.
Mm-hmm.
We talked on the last podcast just about that limited inventory, and we're still hearing the noise of, I had 73 showings on this house. I had 102 showings on this house. And so the buyer demand still continues to be there, which is still driving that seller's market. Looking at the numbers, January of 23, average list price and average sale price. So the houses were selling about 5.6% over list.
Mm-hmm.
But what's really interesting in Monroe County, we saw a 40% jump in the average list price. So
Did you say 40%?
40%. So in January of 22, our average list price was around 195, and this January it was up to almost 271. So when we look at the average over list back in January of 22, it was 12.6% over list. So that's come down a little bit, but the average list price has gone up so much. So you're really actually seeing, a much bigger gain than kind of what we were thinking about. And we continue to hear, if you're a seller out there, and you're considering putting that house on the market, contact your agent, talk to them, because, there's instances where people think they have so much work to do to get their house ready to list. And what we're seeing is what's coming on the market right now and what's selling. Not everything's wrapped in it with a bow on it, and it's still selling. So, if you're thinking about it, now's the time to really reach out to those agents and talk to them, because it's going to be a big, we're in that seller's market still, and there's just a lot of demand for houses.
Yeah. It just feels like it's setting up for similar to what occurred last year. Again, we saw really through April, and we have numerous examples of this, to where the market really kind of peaked at that point. And then those people that listed maybe in the summer months and so forth, we did see things actually soften at that point and really kind of shift more towards the buyer. So again, the message is, if you're a seller that's on the fence, you're thinking about selling, now is the time to list your house. This is when you're probably going to get the top dollar for your house. I know, Joe, we hear a lot about the biggest concern in regards to why people don't list is they don't know where they're going to go. And you and I have talked to a lot of realtors these past, few weeks to kind of talk through how they're looking to address that concern. What did we learn in a lot of those discussions?
It's a lot of creativity.
Mm-hmm.
We've heard from some agents where they've looked at temporary rental housing.
Mm-hmm.
Can you go live with an in-law or a parent? Could you negotiate a rent back in your contract? There's opportunities to get creative, especially as it's still a seller's market, and being able to kind of dictate what kind of terms you need to see. Having a buyer maybe stay, maybe you being contingent on your sale until you find something. Really, those different avenues that agents can speak about and what they're seeing works. Those are just some of the ideas that I've heard, but there's definitely more out there that. Again, if you're really thinking about it, now's the time to do it.
Yeah. So list your house if you're on the fence.
Yeah. And I mean, when we look at some of the other data, interestingly enough, we're starting to see some of the outlying counties seeing big jumps. One of our bigger jumps for Monroe County and the surrounding counties was Fairport, which is typically goes high above ask. It was 35% over ask. But then Batavia. Batavia had 3 sales in there and was at 35% over ask as well. So, not a lot of inventory in those areas. So again, the demand is there and it's driving those prices up. And, when we look across all this data, we didn't have one appraisal gap.
Mm-hmm.
So the houses are still appraising. We're coming in at value. It does feel like we're resetting values again. But the data is there to support it, and the appraisals are coming in. So that's promising. When we look at, Onondaga County kind of had a little bit of the reverse of what happened in Monroe County. Their average list price was down, but their average over list was up. So, Onondaga and the surrounding counties were basically flat all year last year. Now we're seeing a big spike in that, average over list. It went up by 5%. So from year over year. So that's interesting to see as well. So, the data, the numbers are always telling, and we're seeing a lot of that buyer demand still, and a lot of that over ask.
Yeah. Well, again, obviously, we'll as we move on throughout the year, we'll continue to keep our listeners informed and see what changes occur from month to month.
Yep.
So, Joe, to shift gears a bit. So, obviously, the market's changed. GRB, we've been working hard. Our team has worked hard at really trying to create and launch additional products to meet the buyer demand that's out there, and really kind of address different types of scenarios and different types of buyer profiles. Can you share with us, Joe, some of those programs that we've rolled out and how they can help buyers in this market?
Yeah, I mean, so first and foremost, one of our prize programs that we participate in with the Federal Home Loan Bank of New York is the Homebuyer Dream Program.
Mm-hmm.
The Homebuyer Dream Program is a grant program that is administered through the profits of the Federal Home Loan Bank of New York, and households can get up to $10,000 in grant funds. They have to be a first-time home buyer. They have to be under certain income limits, but year over year, we continue to help more and more households with this program. And we've been one of the most successful lenders in the area that has, administered and participated in it. And that program is set to launch on March 27th. So realistically, if you're writing a contract today with a close date of April 20th or later, those buyers can, participate in the home buyer dream and actually go for that.
So
grant.
Joe, if you're a realtor listening to this and you have a buyer that you think might qualify for this program, what should they be doing?
They should be reaching out to a GRB loan officer.
Okay.
Get them in touch with them. Let us take a look at it, see if they qualify. Those buyers, they'd be leaving money on the table if they didn't. And we've seen, that help people get into a home when they otherwise couldn't. A lot of times we hear at this time of year, it's tax refund time. Buyers are going to be getting their tax, refunds back. And then can they couple it with the home buyer dream to get some additional lift in purchasing power? And then the other side of the other piece that we're starting to layer in with the home buyer dream is the Sunny May product. We relaunched Sunny May. It's gone very smoothly on our end. We had a loan that was Sunny May and it closed in less than 30 days.
That's great.
So, taking the Sunny May product with a down payment assistance loan, so you're financing 100% of the house, and then adding an additional $10,000 grant on top of that, you're really coming out of pocket with very little when it comes to buying the house. And, for first-time home buyers, that's huge.
And Joe, I believe, the other benefit that we receive from Sunny May is that as we know, there's a finite amount of funds with the home buyer dream that will, run out probably sometime in the summer. But the Sunny May program is year round, correct?
Yep. Sunny May is year round. So a buyer can still get in with 100% financing. That down payment assistance loan is 3%. So on an average purchase price of $200,000, that's $6,000. So it's almost equivalent to the home buyer dream. It's not exactly the same amount, but how can we get creative with other grants? The city of Rochester has their $3,000 grant that you could layer on top of that. So now you're $9,000. So pretty close to what the home buyer dream is. So even though home buyer dream is finite, like you said, there's other options there to help people get into the homes. One other program that we've are in the process of rolling out is the NeighborWorks program.
How does that work, Joe?
NeighborWorks is a local community nonprofit, and they're providing down payment assistance loans. So this is not a grant; it's a loan. It has to be paid back, and it's geared towards first-time home buyers. But it's really geared to those buyers that make very good income, but have had a hard time saving money.
Sure.
So they can qualify with an additional payment, and they can use those funds to help cover down payment and closing costs on their loan. And the nice part about that program is it goes up to 105% of the value of the home. So not only can you do 100% financing, you can also cover some of your closing costs with it as well. And how many times we hear from buyers or agents, I really want to buy a house, I just haven't been able to save any money. And not everybody wants to go live in their parents' basement to save money to buy a house. So this is an alternative.
Sure.
And it really can help somebody get into a home sooner than they had thought they could.
That's great. That's great. And I know, Joe, we've also rolled out a new program where if someone wants to temporarily reduce their rate, can you kind of share with us how the buy down works and where that makes sense?
Yep. The temporary buy down is another great program. If somebody's a little rate sensitive or more payment conscious. I like the example of, you have a husband and wife and they're having a child and, one of them is going to be out of work for a portion of the year, but they know, once the child turns 1, they're going to be kind of going back and re-entering that workforce. The temporary buy down uses proceeds from the sale, so a seller's concession, and that money gets put into an escrow account. And essentially what happens is every month when that buyer makes their payment, they're paying at a lower effective interest rate. So their rate is still the same at what the current market rates are today, but their payment is based on a lower rate because a portion of those funds comes out of this escrow account, and the two get married together to make that payment whole. So just as an example, if the borrower's payment is $1,000 a month and their effective rate is lower, let's say it makes their payment $700 a month. The buyer would pay $700, $300 would come out of that escrow account to make that payment whole. So they're making their regular payments like they normally would, but they're not having to make it out of their own pocket. They're using the funds from that sale or that seller's concession to fund some of that.
That's great. And again, for the listeners out there, what GRB has done, we have created, I think, a very easy calculator tool that realtors can use so that they can put in a specific sales price, a loan amount, a rate, and it'll show them what the reduced payment is, what the cost of the buy down is. And, please reach out to your GRB LO and they'll walk you through it.
Yep, absolutely.
Yeah, that's great. So, well, Joe, listen, I appreciate your time. This was, I think, a really important update. I just want to kind of share with the group. We're about 6 weeks into this year. Obviously, this year has gotten off to a little bit of a slower start, but we're bullish on this year. And one of the things that we want to continue to do is to do podcasts like this. But for agents that want to come in and learn more about these products, these programs, Joe, what's the best way for an agent to reach out to a GRBLO so that they can come in and go into a little bit more depth in regards to these products, these programs, and how they can effectively use them?
Yeah, I mean, we've been doing this a lot lately, right? We just did lunch and learns, coffee and products, whatever you want to call it.
Right.
Reach out to your loan officer. Let us come in.
Mm-hmm.
Let's sit down, or we can come to you. And let's sit down and kind of go through these different products. Knowledge is power. And
right.
we hear that a lot from different agents is, knowing about these different intricate products helps you stand out.
Right.
And, you don't want to be the one on the sideline because you didn't know that the Homebuyer Dream Program existed or Sunny May was an option for somebody. And I think the more the better off you are in this market.
Right. Exactly. Okay. Thanks, Joe.
Thanks,
Have a great
Mike.
day. See ya.